Welcome to Accounting High.
You can just refer to me as the Kim Kardashian of finance.
How do you differ an accountant versus FP&A?
As a general rule, I think of the accountant as the one who ensures the books are closed, does all the historical financials. That's the core piece when I think of an accountant. When I think of FP&A, they're forward-looking. It's really about allocating the next dollar of capital versus reporting on what happened. Obviously, you get some overlap and blending in companies. But that's really where I separate it, is one is backward-looking and is all about making sure the financial statements are right. And the other one is about making sure the dollars and the allocation and the go forward make sense and align strategically with the company's objectives.
May I have your attention, please?
Live Flow.
Ooh.
So we're going to do more stuff with Live Flow,
Flow's
Nicole.
back.
We're going to continue this train of Live Flow. Anita's awesome. I love her. And we're going to have Terrell come on to do things with Live Flow.
If you have the skill of an accountant and you think like an entrepreneur, you can help every one of your clients make an extra, a minimum, several $1,000s a month, depending on the size of the business.
Hold on, but I'm trying to understand one thing. You've been providing the same type of service, and then all of a sudden you come and say, like, look, you need to buy this tool or that tool, but they already know that this is the level that you provide anyways. Wouldn't there be an argument that, well, we received it anyways, why on earth we would buy this tool now?
So the way I approach it with them is I said, hey, getting this tool is going to make us even better. You'll get more real-time access to the data because I'm giving you the best that I can with the tools that we had. And I know there were a couple clients that were asking about more real-time data feeds. And I was like, hey, based on the limitations of the process, there has to be downloaded from the system and put in the spreadsheet. It's a manual process. Now, if you want faster responses from me, we need to make an investment in a tool. If we get faster responses, I'm going to be able to help you even more than I'm doing now. And so when I explained it that way to them, they were like, yeah, hands down, let's do it. Let's go get this tool, because if this tool is going to help you give me even better information, then they're like, we're going to make even more money. And I'm like, I agree. And so when we start looking at it that way, I think that changes the whole nature of the conversation to where they aren't like counting pennies and overanalyzing, saying like, well, maybe I can afford it. It's like, no, I'm going to help you make more money so you will be able to afford this and other stuff you want to do.
You recognized there were limitations in the process, and it was your process that was being limited. And then this is an outside tool or something new that can be introduced to then unlock the entire process. And that's what automations do at our firms. That's what, whenever we introduce something new, like ChatGPT is the big unlock for the world right now. Like limitations in everybody's brain processing. Now we have an AI assistant to help us with everything and anything, right? But when you're looking at your processes, a lot of firms, that's their limitations to grow or to do anything. They hit ceilings when their processes aren't matching up, or they don't even have documented processes. Live Flow is just a play on that word processes, workflows, processes, Live Flow, right? So Live Flow is being inserted in that process to then create an entirely new process that's better too. And that's their product. That's your product that you're selling the client. So I think that's beautiful. It's awesome how you did that.
May I have your attention, please?
Welcome to Accounting High. It's freshman year at a brand new school. Here, we have no rules in place as we're on a mission to set our own traditions. So hang tight and learn with us as we grow. At Accounting High, you can expect to gain knowledge in a completely different way than what you may be used to, with some fun and oftentimes colorful conversations involving some of the best teachers in the accounting industry. Whether you loved high school or you hated it, here's your chance to be a part of an unforgettable experience redone. While you're here, don't forget to follow us on Spotify or subscribe on Apple Podcasts or wherever you may be listening to us right now so you don't miss out on any new episodes. And feel free to leave us a 5-star review letting us know how the school year is treating you. So sit back, relax, and open your mind because class is in session.
I repeat, may I have your attention, please?
This is another public service announcement brought to you in part
by Accounting High.
The views and events expressed here are
of the next generation of accounting and tech professionals leading this space.
The events and suggestions are not to be taken lightly. Children should not partake in the listening
of this podcast.
Anything else?
Yeah. So without further ado, introducing the star of our show,
Scott Scarano. Solo episode today. Class is in session, and we have the famous FP&A guy, Paul Barnhurst, with us today.
Thanks for having me on the show, Scott. It's good to be here. I'm doing good. And you?
Yeah. You got a nice beard coming in, too. Since we last spoke, you cut some hair off the top of your head and kept it going on the face.
Yes, the beard's been going for a little while again. I had it about this long, 6-7 months ago, and then I trimmed it all off and started again.
Yeah. So I was introduced to you by somebody who reached out to me from LinkedIn, and I was excited to meet you. You know, he talked you up, said you're all over on LinkedIn, and it's pretty impressive. Like let me just say your LinkedIn numbers here. You got almost 30,000 followers. Most of your posts get at least 450 engagements, whatever you want to call that, like likes and I don't know. I don't even know how to track engagements or impressions or anything like that. I just know that I know good numbers when I see them, and these are some pretty impressive stats here. You've got a podcast that gets over 1,000 listeners weekly, so you got a platform here. I just wanted to kind of set the stage and start that off. Tell me about let's just start at the beginning, right? This is Accounting High, so you got to start like high school days. Tell me about how you got into this whole numbers thing.
Yeah, so it's funny, as far as numbers go, I've always liked numbers. As a kid, I delivered a paper out. And the first thing I do was tear open the sports section of one of the papers. I'd always put it back together so they wouldn't know. But I'd take out the sports section and I'd read the box scores. I loved the numbers and the stats of sports. Then I got into high school and was taking my classes. I took my first business class my junior year of high school. It was an entrepreneurship class. Loved it. Competed in the state competition for DECA for writing a business plan. And my senior year, I competed again, and I had 3 business classes my senior year, and I ended up getting to compete in the national competition in Detroit for writing a business plan. I wrote around about starting, I think the second one was a running shoe store. First one was a new and used computer store or something like that. This is back in the 90s. So I'd always enjoyed business. I ended up going to BYU, got my degree in business management with an entrepreneurship emphasis, graduated in 2008. And at the time, I was no good at networking. I wasn't good at finding a job. And it took me quite a while with the crash. Actually, not 2008. That was grad school. This was 2001 when I graduated from undergrad. So right after September 11th. And I hadn't found a job yet. So the economy was really struggling, and ended up going to work for the government, which is where I always said I'd last go to work. Took a job with the government, was there for about 4 years, and pretty quickly realized, working a career for the government is not for me. Went back to grad school and did a Master of Science in Information Management and an MBA in Finance, and then went to work for American Express. And that's where I got into FP&A. Worked for 3 different companies. And along the way, as I was doing that, as I was looking for a job, I started to do a few things on LinkedIn. And at one point, about 5 years ago, I reached out to a guy. And I asked him, I go, hey, I'll give you a Starbucks gift card if you'll spend 30 minutes with me. He goes, I don't want your gift card. I want you to write an article for my website. I suck at writing, but sure, I'll write you your article. And I wrote him one and he liked it. He's like, hey, will you write me a couple more? I'll give you, I think he said something like $100 an article. And so I did a couple for him and started to do a few things on LinkedIn here and there, not thinking much about it. And over the next couple of years, had periods where I was pretty active and times when I was not active. And then as I was really looking for a job again, I started to get more and more active on LinkedIn. I got a couple opportunities to be part of a FP&A webinars. They're done by FP&A Trends, one in Europe and some other places. They're all remote, but I did 3 of those, wrote a couple articles, had a guy in Australia reach out to me, some different things. And then I started to get more serious. I got close to, it was October last year, about 5,000 followers. I started to post kind of daily last year when I got a new job in 2021, and it wasn't near as busy as my prior job. And it was probably October, November, somewhere toward the end of last year. In 1 week, 3 different vendors, I'd written about software vendors, a lot about FP&A, had offered me different kind of jobs. One had discussed possibly doing a podcast with them. Another had talked about possibly hiring me, some different arrangements. Around the same time, someone reached out to me and said, hey, I want some help with building some training for Excel. And another person reached out to me about a potential consulting job. And I told my wife, hey, I think I can make this a business. She looked at me like I was crazy. And, for a while, she kind of like, I don't know about this. About a month and a half later, so I think it was probably early February of this year, she said, hey.
I get that crazy look a lot.
Yeah, I do too. And I deserve it. So it's all good. But she said, hey, you can go for it.
I definitely deserve it. Yeah.
And I said, are you sure? She's like, oh, yeah, you can go for it. I trust you. You'll figure it out. And I'm like, all right, well, I'm giving my notice today. And I put in my notice that day. And they asked me to stay on for a little while. So I did some stuff part-time. So June is when I went 100% full-time without working with them at all. And, things have been going great. Been doing
full-time influencer, full-time what?
So full-time, my own business. I have
this?
3 things I'm doing. So I like to call it content creation versus influencing, like the podcast. I do influence marketing.
I don't like the word influencer, but everybody uses it.
I know.
It,
When you'll laugh at this. I probably shouldn't admit this on a podcast, but I did on LinkedIn. So one day someone's like, people will be like, oh, you're famous. You're an influencer. Everybody knows you in the FP&A space. And someone was kind of going on about it. I want to call one day and I go, yeah, you can just refer to me as the Kim Kardashian of finance. And they just laughed. I was like, that probably wasn't the smartest thing to say, but I just have fun with it. So I do the podcast. I do some webinars. I've done 2 so far. I got another one coming up in a couple weeks, another one in November that I'll do for different vendors and a number of other things, sponsored articles, posts. Then I also do some Excel training. I've built an FP&A training course, and then I'll do a little bit of consulting here and there. The big thing that I just released was our what we call our 3rd generation market guide, which was around what we call new FP&A tools that have come out over the last couple of years, financial planning and analysis tools. So that's the backstory.
I love how you I love how you gave me the acronym, even though you go by the FP&A guy, and you still said financial planning and analysis, because it's
what can I say?
It's something that I would hear thrown around all the time. I would hear it thrown around, and I didn't even know what it meant half of the time people were saying it, because it was just like maybe it was a little foreign. But yeah, it's you're a professional at this, so you still have to introduce it. Just in case,
pretty much.
FP&A guy could mean a lot of different things. I'm sure you've got a couple other fun things that you might throw in there.
Well,
what FP&A could
somebody
mean.
did one time looked at it and goes, what is the FPanda guy? When they saw it, because if you spell out the end.
FPanda?
Yeah, they're like, what's the FPanda? Like a friend I worked with, and so that was a joke for a long time. I even had a logo my wife drew up that had a panda in the middle and said FPanda.
That's cool.
So
I like that. Yeah, panda. So you're in this for the long haul. You have a podcast too, right?
Yep.
Tell me a little bit about that.
Yeah. So the podcast I do it with DataRails. So DataRails is one of the financial planning and analysis tools out there. They sponsor it. We've been doing it now for 6 months. I think we started recording in March, released our first episode in May, and we're getting ready to release episode 23 tomorrow. So, it's gone good. We've definitely seen growth. We just passed, I want to say in total, 24,000 downloads. So,
oof! I've got 100 plus episodes, and when we're at 24,000 downloads too. It took more episodes for us to get there, but yeah, that's a good number.
It is. Well, I've had really good sponsors, and what really helped is I had a good when I launched it, I had a good LinkedIn following. So that was kind of built in to help with the podcast. Yeah. I wasn't starting from kind of scratch, so to speak. I had a really good marketing team with the sponsor that put a lot of emphasis behind advertising it and had a good email list. And so that definitely helped with the following.
Sure. But let's also set the stage too. Who's your audience? Is it business owners? Is it finance people? Is it accountants? Who's the audience? Yeah,
so the audience is really people that work in budgeting and forecasting primarily and doing the analysis. We definitely get accountants who are interested in FP&A, but it's really your core, finance people that are interested in budgeting and forecasting. Like the guests we have on the show, almost pretty much all of them have worked in FP&A. Some might have been a little more data, specialized in Excel. Some have been CFOs, but very heavily, hence why it's called FP&A today, is really emphasizing the forecasting, the planning, the budgeting, the analysis, the business partnering. Obviously, a lot of the people I interview have accounting backgrounds. I'd say 60, 70% probably, because that's where most people come from in FP&A.
Do they come from working, big four or private firms, or are they CPAs that went private?
Yeah, that's a good question. I mean, a percentage or CPAs, you get a mix. So I think there's probably 4 places that people come from that do FP&A, maybe 4 or 5. There's the accounting background, and many of those go big four. Sometimes there's audit, but usually it's more traditional. They did a little bit of audit for a couple of years, CPA, then went to work for a company and ended up moving over into FP&A. They might have been a controller at a small company where they did both, right? You do the budgeting and you do the accounning. And they decide, hey, I like kind of this budgeting and analysis side more. So I think that's the first area. Second is you have people that just started their career in corporate finance, no accounting background, and they get into FP&A because that's just a common role in corporate finance. Then you have 2 other groups that especially you see with a lot of, I think, SaaS and hyper growth companies is one, people have a consulting background. They did some kind of consulting. They might have had an accounting degree. They might have something else. They might have been doing, restructuring, M&A, whatever, but coming from a big consulting firm. And then you get those that come from investment banking and decide they want to go into corporate finance. So I think those are typically the areas you see. I mean, you always have some other stuff, but those are the main areas you see people coming into FP&A from.
Yeah. Well, it's a pretty hot topic with a lot of accountants. Every accountant wants to get into advisory, and usually with advisory comes some form of forecasting and other type of FP&A light type work. I don't know how heavy it gets in a lot of accounting firms, but traditionally accountants now, that's kind of getting blended in. How do you differ an accountant versus like everybody else that is funneled into FP&A? What do you, when you refer to an accountant versus somebody that's in FP&A, like or in that budgeting area, how do you differ them?
The way I look at it is, right, as a general rule, I think of the accountant as the one who ensures the books are closed, does all the historical financials. That's the core piece when I think of an accountant. When I think of FP&A, they're forward-looking. It's really about allocating the next dollar of capital versus reporting on what happened. Obviously, you get some overlap and blending in companies, but that's really where I separate it. Is one is backward-looking and is all about making sure the financial statements are right, and the other one is about making sure the dollars and the allocation and the go forward make sense and align strategically with the company's objectives.
I like that because accountants typically have surrounded themselves with taxes and audit, and that's all history. Taxes is reporting on everything that already happened, and audit is auditing what's already happened. And that's our whole umbrella of work in the most part. Now we're starting to see accounting firms split out audit and then have separate consulting arms, but we're hiring, we have to hire an entirely different skill set because you can't, I'm not going to say you can't, but it's very difficult to take a traditional accountant who's comfortable looking back historically and make them look forward, because you can't look both ways at once, and it hurts their neck to try to have to turn around and then turn forward, turn around, turn forward. So, to our listeners too, what I'm starting to see is advisory, people are starting to get more comfortable with that phrase, but they're using it in a sense of, we're going to do some tax planning. It very light, but nobody's really doing that forward looking unless they're hiring some kind of outsourced virtual CFO or somebody that is a finance guy.
Yep.
And that's an entirely different. I think I see more similarities with salespeople and finance people than accountants.
I would agree with that.
Typically.
Yeah, I would agree. And I think the reason is, one of the most important skills now today for FP&A people is that business partnering. Everybody has the idea that FP&A just sits at a spreadsheet all day. And some days that may be true. And in some roles that may be true. But as a general rule, and the part I like about it is really that partnering with the business, helping them understand the numbers, helping them, achieve their goals in the most efficient way possible with allocating the dollars. And so that really requires sometimes influencing without power. Because it's not like FP&A is in the power structure where you're going to have power over the people you're working with, right? You're supporting them. And so when you see things that need to be done, you got to help influence that, which is really what sales is doing, right? They're trying to influence somebody's decision to buy something. So there's definitely some similarities.
Influence without power. That might be the title of this episode. I like that phrase. You're an influencer too, like I just said earlier. Do you have power?
I don't define power. No, I mean,
in this content creation world, I don't know. Like, I mean, you define your own power, right? Like you said to your wife, look, I think I'm going to do this full time. You had the power to do that. And now I guess there is a way to define power, but do you like,
I would definitely feel like
Yeah.
I've made a difference in the marketplace in FP&A. And I'll give an example. One of the things I did when I started my business is at first I started an Excel website. And I was writing about seller reviews and thinking, hey, maybe I'll try to make a business out of Excel. And I realized I have no competitive advantage. I'm just going into a huge field with a ton of really good people. And so I started talking to some different vendors and tools. And really part of that is at the time I was trying to get a job with a couple different vendors and I started writing about some of them. And then people saw, oh, hey, he's writing about tools. I should ask him if he'll see my tool. And I saw their tool and I saw another one. And over the last year, I've demoed over 50 different tools. And that has been my lead engine. That's what I've been recognized. I built an FP&A guide and demoed, I wrote surveys and did demos of 20 tools and put together a 40-page book about what's out there in the marketplace that people aren't aware of. And now getting ready to do a demo days. And so from doing that, I've become recognized as the expert. I'd worked with different software tools. I've always had a liking of software, but before I really set out to understand the marketplace, by no means was I an expert, right? Yeah, I'd helped work on some potential implementation projects and things. So that's an area where I feel like I've been able to influence and make a difference and be able to talk to a lot of people and help different companies and things. So it's been a really interesting journey as I've tried to figure out how to build the business. And it's worked great because it helps build a lead engine. Many of these companies are new and I can do influence marketing with them. We can write an educational piece together. So it helps drive the business engine.
I love that too, building lead engines. So 50 different tools and all this. I'm fairly new to the FP&A world, and it was introduced to me through Giraffe, LivePlan. Most of the phrase FP&A that I heard generated from people that were surrounded in the Giraffe world. And Giraffe has been really heavily focused on accountants. They're the one tool that I can think of off the top of my head. But then Data Rails and all of these others that you were mentioning, these are tools that I don't think that they're marketing to accountants. Are they? I guess is my question.
Yeah. For the most part, they're marketing to core FP&A. Some are marketing to fractional CFO services where they do bookkeeping and some advisory. Examples of those would be Clockwork. Maybe a little bit of Finmark.
Clockwork. I was just on his show. Yeah.
Yeah. Ginny is another one. They're actually based out of Hong Kong. So there's a few that are focused on the fractional CFO. Profit Frog is another, but most of them are not. Because really the core person that's using it is the finance person. Obviously, it's going to integrate. Every single one of them is bringing in your ERP, your accounting data, right? If they're not, then don't buy the tool, basically.
Right. So and we defined the difference between accountant and finance type. Is this a losing game for Giraffe or the others that are marketing to accountants because they tend to have trouble with the accountant channel? They tend to not see as much adoption, or when they do see adoption, people, and this happened with LivePlan as well, where accountants tend to be slow or never really fully adopt it. So I don't know.
I don't know that I think it was a good move by Giraffe. I think they've done a pretty good job of locking up that space. I think they've done a good job with their development channels. Again, it depends on the size and the customer you're going after, right? If you're an Anaplan that's going after a mid-market enterprise that has 5 to 50 FP&A people, maybe even more when you get into like an American Express or a Coke or, a big multinational company, you're not selling to the accountants. You're not worried about fractional CFO. You're not worried about small companies. So it depends on what company size they're going after and how they've built the tool, right? Those that are going after kind of that fractional CFO where they offer advisory services where you see some overlap sometimes between bookkeeping and that. Yes, I think some of them would like to get a little more into the accounting space. I definitely think they could see some growth there. But, again, Girav's done a pretty good job in that area. But I definitely think there's enough out there that you don't have to be marketing to that space to be successful. And we're seeing it. I mean, the amount of growth and the fracture we've seen in the last couple of years in the industry and the amount of VC dollars going into it just shows how big the opportunity is. I mean, between private equity and VC, not counting Anaplan going private, if you count Anaplan going private, I think they were bought at 11 billion. There's probably been 13, maybe 14 billion dumped into the space in the last few years.
Just FP&A?
Yeah, just FP&A tools. There's probably almost 100 of them out there now. I mean, just the 15 I highlighted in the guide are close to 600 million in raising. Vena did a few hundred million a couple of years ago. Profix did some, Anaplan was sold. So that was an 11 billion they were public and went private. But yeah, the dollars that are being spent in this space is huge because think of the opportunity. Over 70% of people plan in Excel. And think how many people use Excel, how many companies are out there. And, typical price point on many of these tools is, $1,500, $2,000 a month for a mid-market company. A small company might be $500 to $1,000
versus Excel, which basically doesn't cost anything.
Yeah,
right.
Yeah, but if you
Excel,
can
you
can get
pay for your
1% of the
Microsoft
market,
license.
if you can get 1% of the market at that price, that's a huge opportunity. But yes, much more expensive than Excel. But when you deal with the pain point, when you hit that point where Excel doesn't work, people are usually willing to spend it, right? Because the reality is we've all hit the point where version control, security, linking files together, you get into what you call Excel hell, right? We've all dealt with it. If you've done any kind of budget where you're just throwing up your hands and the numbers are wrong because something broke in your link or you screwed up your model, and so that's really what they're trying to sell on is, hey, look, one, we can take away a lot of the pain points of Excel, and two, we can integrate all your data, right? Bring in your accounting data, bring in your Salesforce or your CRM data, bring in your HR data, bring in your billing data if you're a SaaS business in particular. Put that all in one model and let us help you plan and report and do all those things versus doing it all manually. I mean, that's the business proposition, and there's pros and cons each way. Obviously, nobody's cracked the nut completely. Otherwise, we wouldn't be seeing, 70% still using Excel.
So with that many players in the market, that much money in the market, how do you go about picking the right tool? How do you know that the tool you pick is going to last?
So there's a couple things. One is people have to realize, I think the biggest thing is the tool is an enabler, right? Anytime you're adopting anything and going through a digital transformation, you have to think about strategy. You got to think about long-term change management. Make sure your house and your data is in order. So I think that's the first thing. Next thing is knowing what you want. I was talking with somebody the other day and just kind of was trying to segment the market, and without just looking at small, medium, and large, but kind of the tools. And the way I think of it is there are some tools that are totally linked with like Power BI or Click, or they're totally a BI tool with planning integrated, and you write back to the database. So it's like, hey, is that important to you? Do you want to integrate that all? Do you want that? Do you really need to be able to use your spreadsheet and you want to be closely integrated your spreadsheet? Okay, then you have like a DataRels and a Vena and a Cube. Do you want something that doesn't use Excel at all, like a Causal that's trying to replace Excel? And then you want some kind of hybrid. So I think first kind of understanding what makes sense for your business, what you want. But beyond that is having that list and walking through your business requirements, having a business case that you can ask them to demonstrate to make sure they can meet your needs. Because they all say they're industry agnostic. Mm-hmm. They all say they can do any kind of planning. But the reality is they all have different strengths and weaknesses. And so walking through that business case versus just being sold, what often happens is they go to an implementation firm. The implementation firm only uses one or two or maybe three different software vendors they implement. And they just say, oh, yeah, this one will work great. And they're like, okay. And a year or two later, they're back to using Excel.
Yeah. So first, does Microsoft have an FP&A tool?
They do not.
And why not is my question. Like they they pretty much own the market as far as Excel and everything else. Like you would think with this big of an opportunity, they can get people off of Excel and onto their platform.
I've asked that question, and I've wondered the same thing of why, because they have an ERP, right? They have Dynamics, they have a CRM, they have the BI tool, they have almost everything edge around it. Now they have some very basic budget forecast models within their ERP, their Dynamics, but pretty much every tool has some kind of really light thing, but they're not heavily used for budgeting and forecasting. So
it's crazy because Dynamics is a pretty powerful platform. And if you could own the market everywhere else, I mean, I guess they see Excel as their
That's
tool.
what I think. I think what
Excel's,
they've done is, I think it drives so much partner engagement between Excel and BI that there's probably a lot of income there, and they've decided that works well, and they'd rather spend the dollars on dominating BI, dominating Excel, doing the automation stuff they're doing. It's the only thing I can think of in the Dynamics, because to me, I've wondered for a long time why they haven't.
Yeah, they could own the market. They could take some of the best players and consolidate, or whatever they decide. But the fact that they do work with everybody and they play nice with others, I think that plays well to the fact that it's such a huge market that if they can cut deals with everybody, then they're probably making money on the back end.
Yeah, I'm sure they're not hurting, because so many of these tools want to be Microsoft certified, right? They're every single one of them. We all know what's the most common button in any software program: export to Excel, right? It's the number one button in every
CSV
finance tool, a CSV or an Excel file. Usually you get the option to do both.
Yeah. Or a number of them. I mean, not just Excel or CSV. I mean, XLS, Excel.
XLSM, Excel.
So I guess,
So
it's the industry standard for computing,
as I've heard it say by some people, in some ways, it's almost the operating system of finance, not accounting. Obviously, the ERP is kind of that operating system for accounting. But outside of that, I mean, in so many ways, so much is done in Excel. It holds the finance world in place. Like if we got rid of Excel tomorrow, right? How many models, how many deals? Be a mess.
Well, that's just not possible. That's like saying, what if we get rid of AWS? Tomorrow?
Well, exactly. That's what I mean. It's just they're just so ingrained in everything we do. I mean, go look at any job. Go look at jobs in finance. 80% of them require Excel. A few are Google Sheets, but they're almost all Excel.
Yeah. Well, then that's my next question then. So I was going to say Apple, but Apple doesn't ever really do things. They don't really try to penetrate the business market that much. I mean, they've got everything else. But Google, does Google have a tool?
I'm not aware of any planning tool for Google. There are a couple companies that have now built planning tools on Google Sheets.
Google Sheets.
Like there's one that pretty much has the exact same syntax as Google Sheets, called OnPlan. Cube is another that integrates both Google Sheets and Excel really well. And others have, built a kind of a hybrid where they try to load stuff from Google into their tool. So you're seeing a little bit more built for it, but I'm not aware of any planning tool by Google Sheets. I know there's one, and again, it wasn't done by Salesforce, and I haven't had a chance to demo this one, but somebody built a planning tool that sits in Salesforce. It's a total add-in to Salesforce. So another one that was built on Click recently.
Salesforce, that's interesting too. So you said the word fracture earlier. Define that, or tell me why you say fracture.
Well, I mean, if you think about it, let's look at the spreadsheet market or the ERP market. So if you take the spreadsheet market, right, you got Excel, you got Google Sheets. You got two big players, and then you have a bunch of small little ankle biters, Office Suite type stuff, whether it's Corel or Sun or Libre, or there's some new guys in the space, Equals, Sheetrock, some others. But it's dominated by two players. If you look at the ERP, if you're a large company, it's mostly dominated by SAP and Oracle, right? If you're a small company, it's dominated by Xero and QuickBooks. And then you have a bunch kind of that mid-size NetSuite and a few others.
That was my next.
Sage. When you get into manufacturing and restaurant, Sage, you have some unique. But probably 80% of the market is maybe 7 ERPs, counting Dynamics and Sage and
Oof. Well, in our market, it's like 90% QuickBooks, and then Xero has another percentage, at least in the U.S.
Yeah,
market.
and the smaller size of the market. So right, it's very consolidated. Yes, there are some little ankle biters and some specialty, but you look at the FP&A and it's not. And I think what it is as cloud became available, as web apps became really easy to program and data integration, right? You can get native integration to just about anything quite easy now. Everybody saw the pain points of Excel and saw this as a really attractive market. And in the last couple of years, they've gone after it very heavily. Tons of new entrants. I mean, there is almost not a week that goes by that I hear from a CFO or a CEO that wants to demo their tool to me. I mean, it's crazy how many people I talk to. And I think it's because, if you look at it, there's low barriers to entry. There's not a lot of dollars to get in. Now, it takes a long time to develop a good tool, but the barrier to get in isn't high. Right. There's, you have Excel, but beyond that, there's not a ton of substitutes, right? If you kind of do a strategic analysis, there's definitely some areas where it's attractive, and there's a lot of VC money. And so I think that's what's driving it. And I think in time, we'll definitely see consolidation in the industry.
So the leg up that a lot of these companies have is probably the founder has a history in finance, FP&A. They know how to put good numbers together. They know how to put together good projections. It's going to be easier to get funding if you're the person that's doing that. Like if you have that history, like I would have to think that what $500-600 billion in this market has to be a direct result of the people that are in this market too.
Yeah. So I think there's two things I'm seeing in the founders. There's a number of them, right? They were CFOs. They came from the finance space. So it's one of two. They came from the finance space, or they came from the tech space, and they headed up prior successful exits, and they saw the pain, and they saw how they felt finance was behind other areas of the business technically. And so they set out to solve it, and they found somebody who had the FP&A experience to be part of their leadership team. So that's usually the two paths you see of these starters. And so, yes, if they're ones that have been successful with multiple exits, VC are going to line up, right? If they feel like, they got a management team that everything they've touched has turned to gold, why wouldn't I put a couple $1 million in and take the risk on the fund?
Yeah.
So, and they're doing it left and right.
It's a no-brainer for them because it's always a gamble anyway. Anybody, anybody's a gamble. So this now one thing that is a hot topic or everybody is talking about is VC money is drying up a bit. Are you seeing that, or is it still flush for this market?
I wouldn't say it's flush. I mean, you're definitely seeing a lower of the valuations. You're seeing it dry up some. I've seen since kind of the market went dry, there's been two big announcements that I'm aware of. Cube raised $30 million, and they probably had that finalized because it came out a week or two after kind of really when things started to dry up about 4 or 5 months ago. And then last week, Pigment announced its second Series B rounding of 67 million. So they've raised 167 so far. So those are the two big ones. I mean, there's definitely still money out there. I work as a non-paid advisor for Born Capital, and they've done I think 2 small investments since things kind of dried up. One in an FP&A tool and one in something else in the office of the CFO. I can't remember which tool it was. So it's out there, but it's not like it was.
So you picked the right market to go into. There's a lot of action, a lot of activity. Let's talk some hard numbers for your business now, right? So you're a business owner.
Yep.
Do you have any employees? Not
at this point. I'm hoping in the next few months to hire a virtual assistant, but that would be it.
Oh, I love my VA. Let me tell you, I'm still getting all the kinks worked out and everything, but I don't have to go into my email anymore. That was the only thing I wanted to get out of was email. Hate email. Yeah. So you're kind of like doing, this was it's almost like you found your calling, you found your purpose, you found what you want to do, and you're successfully doing this as a solo artist too. Like you don't have to have a team around you for something like this. You're fulfilling your passion. You're filling your calendar. You're filling, I'm sure you're a very busy person doing all of this. How much money are you making doing it?
So this year, my goal when I started the business, and this includes, my working some full-time, some part-time for a few months with a job. But this year, the goal was 175 for a full year. I'll probably clear somewhere around 220.
Okay.
And my goal, if I can get some digital courses and continue growing, I'd like this to be a 350,000 a year business.
And that's almost pure margin. I mean, what is your overhead?
Not much. Yeah, there's some tools.
It's the same overhead that if you weren't working, right?
Yeah,
I know, but for real,
it's a couple percent.
They're going to give you their tools to test. Like, you're not paying for any FP&A tools. You're not paying for much of anything. Like, honestly, if you weren't doing this and you were just kind of like selling crafts, you got to have internet. You got to have, different things. I don't know why I brought up crafts, but
yeah, you get the idea. I mean, basically,
that's
it's the subscription tools. It's Canva. It's Microsoft Office. It's whatever. Those type of things. Just the different subscriptions, some insurance. I mean, you're maybe $400 or $500 a month in different subscriptions, insurance.
What kind of insurance?
Like that. Just business insurance.
What kind of insurance?
I just have I think it's like a $1 million liability policy. There's not a lot to it.
And what are you worried about to have that? Like,
the only reason I had it is I had to have it for some consulting stuff I was doing. They required it, so I figured it made sense.
Like, they required it just to get the workers' comp thing. Yeah.
So
because they're hiring you and they're saying you need insurance because we can't put you on ours because you're not an employee.
So,
is that right?
Yeah, just to cover any kind of risks. And so I've just kept it. I figure you never know as you're growing. There's always different risks.
So what did you do? Did you set up an LLC?
Yeah, I set up an LLC. Yep.
LLC. So are you running as a sole proprietor? Did you do an S corp? How did you
set
that up?
It's a sole proprietor for now. I haven't done an S corp. We've had some talk of possibly switching it over. We'll see if it makes sense.
And do you work with an accountant?
I do have an accountant. Yes.
Okay.
Here.
That's always a question that we ask.
I just
not an accountant already.
I could have done it myself, the quarterly stuff. But I'm like, it's just time with running a business, the complexity. I'll let somebody who's more deep into it do it in case I'm missing.
Well, that's the right answer on this podcast.
Yeah,
you gotta hire a professional.
I'm just like, it's not my.
You're definitely making enough to be an S corp. I would tell you if you were talking to me or my firm, you should be an S corp at this point because you're probably paying too much in self-employment tax right now. Like, there's a way you can structure that a little bit differently.
Yeah, I know about
but
that.
There's also,
we've had some conversations.
Sure.
There's some other things as well. But I know exactly what you're talking about with the S corp and the pay yourself a salary. And
I'm not here to grill you, but
no, you're fine. I did have.
I'm sure it's relevant.
I had that conversation at length with the accountant. So
good. And does the accountant do your taxes too?
He will. It's new. I just hired the accountant this year. I'd always done them myself before this.
Okay.
So.
Okay. There's no shame in doing it yourself, but usually people do leave some opportunities on the table. So this is a legit business endeavor. You're pretty much handling it all yourself. I mean, does your wife help out with some stuff too, or does she full-time job? How does that?
Yeah, she helps out from time to time. She mostly takes care of our daughter, and there's some other things she's working on, but yeah. So she may help out more in the future, and we're hoping.
So would you say that the foundation of all of this was LinkedIn?
100%. Without a doubt.
Tell me a little bit more about LinkedIn. Why LinkedIn?
So really, I mean, for LinkedIn, it started with just trying to get a job. But then as I built, last year? So as I started to grow, people reached out to me with job opportunities off LinkedIn. I mean, I've been asked about being a CFO. I've had some consulting gigs. I've had vendors try to hire me. But, in addition to that, what I found is there's a guy by the name of Anders Lou Lindberg who's built a very successful business from LinkedIn. He has over 100,000 followers on LinkedIn. And so I modeled after some of the things he did. And LinkedIn, businesses have found, as far as social media and driving leads, 40% of marketers say it's the number one tool. And, a lot of data shows it's one of the best places to get leads for your business, LinkedIn. And so it gives me a built-in opportunity. One, there's an audience there. So when I launch digital courses, there's an audience to sell to. Two, the vendors really like it because I'll write an educational piece with them. So I'll pick a subject. I don't do promotions, but I'll do educational pieces. I'll write an article for them and put it on LinkedIn and they get traffic. Like I did one for a company that was pretty much brand new. And they talked about, how they had a number of signups and they saw a spike in their traffic on their website. And what it allows me to do is the audience likes it because I'm not saying, hey, you should buy this product. I'm not going out there and promoting it and doing affiliate. I'm saying, look, here's some educational content that fits well with the vendor that they could help you solve this problem. You should, if you're interested, check them out. And here's something to help you solve your problem.
That's so valuable for everybody because it's very transparent when somebody's just promoting products on there and just pushing it for their affiliate link. And people tend to tune it out. But if you're trying to add value in everything that you're doing, everything else naturally kind of fits its way in. But it's a lot of work to get there too. So you said when you started out, you had about 5,000 followers. I don't even have half that. And how do you even get to the point where you had 5,000 followers to say, I'm going to do more of this or take this seriously?
So I think for me, one area that really helped me drive my followers when I was first starting is one, I wrote an article on Excel and I referenced a guy that was a very successful financial modeler out of Australia that I patterned the article after. And I remember I got quite a few likes from that. I think I got over 10,000. At the time, I might have had, 1,000, 1,200, whatever, pretty small audience. And so I thought, hey, there's something to this. And then there was this group that I joined called FP&A Trends, and they were looking for people to help moderate the conversation. So I started doing that, and that required me to help once a month come up with posts. So I started to learn to post. And so I started to do more things of my own, and people liked them. And I started building some audience. And then, other people would reach out, hey, do you want to write this article for us? And you get some followers from that. And hey, be part of this webinar, and 50 people might follow you from that. And it started building. And then I started doing, almost daily and seeing others and started to build it. And it was around between 4,000 and 5,000 when I started posting every day. It was probably, I think, around November last year. I might have missed one day toward the end of the year, but I haven't missed a day this year. I've posted now, almost 300 straight days.
So that's like your daily habit.
It's a daily habit. And
that's your process.
That's a process. And in that time, I've grown, from a year ago to now, I've added about 23,000 followers. And I'd say an average month, I'm adding, 2,500 right now. In an average
more
month.
Than I even have as a total. Yeah.
But it really comes down to consistency.
That's just the kind of frame of reference.
Thing.
Yeah.
Really consistency and value. If you provide, value to people and you're consistent, it will happen. It's just a matter of time.
So consistency and value. I like that. When you are doing posts every day, how do you go about this? Do you already have a bunch that are laid out that are just ready to be posted? Are you doing a whole one day where you do a bunch and you tell me a little bit about
I'm pretty bad at this. So, I have one post every week that will always be the podcast. I usually have one other sponsored piece where I've worked on an article. Outside of that, I usually write the piece I'm going to do the morning of. I finally started to create a content calendar because of the business. So I will admit it's been really bad. Some mornings it's get up and, hey, let's just find something that worked well from a few months ago. I'll go out to Shield, look at something, tweak it a little bit and throw it out there. Other times it's coming up with something fresh. Sometimes I have ideas in my head. I might lay out a week. I've got to the idea where I know kind of what I want to cover, and I'm trying to get much better at now systematizing the content. Now that I have a good library of it, and now that I have a fair amount of sponsored stuff, getting much better at really putting a calendar together and thinking through what the strategy is. Because I've been for the most part, last year I flied by for a lot of it, the seat of my pants in the sense of wake up that morning and what do I want to write about? Which isn't the best way to do it.
But that was the first thing you did. No. That the best way to do it is that's what you were doing. You didn't let the day go by and eventually do it because that's how habits break.
Yeah.
Always.
Very rarely did it
get really set out to.
Yeah.
And the day that you missed too, right? And so regardless of what you have going on, you could do a post because you've got your phone.
Mm-hmm. I make sure I do one.
Are you doing it mobily or are you doing it on the computer?
I usually do it on the computer, but I'll do some mobile from time to time. A little bit of both. And what?
Because LinkedIn is rewarding mobile lately, I've noticed. I don't want to keep switching gears.
You're totally fine.
I have noticed they allow you to do more on mobile than they do on the computer, and I think that's because they're trying to push people toward that. Like you can do certain types of posts and certain things only when you're on mobile does it allow you to do that. Have you noticed that?
I know they've started to add more and more things. I haven't noticed that as much myself with the type of posts I'm doing, but I know there's some different changes they've made to the mobile and what you can see. I know they're adding some links. They've done a number of things. They've added LinkedIn audio, kind of like Clubhouse and different stuff. So I respond to a lot of people. I mean, I use my mobile all the time. It's not like I'll write the article on my computer just because it's easier to have more when I'm going out to websites. Building something on Canva is much easier to do on a computer than on a mobile phone. And often I'm including some kind of graphics or something I've built on Canva. So that's usually why I use desktop, is just some of that authoring process is just easier.
And when do you find you get your most engagement? Do you already know if a post is going to do well? Like, even with reposting, do you take sometimes posts that did very well, repost it, and it doesn't do well? Are you finding like
they generally still do pretty well? So what I found, I mean, there's definitely topics that do better than others. One of the top topics you always see is Excel. People love to discuss Excel. Other is how-to guides. Like I do a monthly, it's almost 70 pages now, where I release it for free that covers FP&A, Excel, financial modeling. And the first time I did it, I want to say I got 1,000 followers from that one post. For me right now, a really good post, like I probably had maybe 10 that have hit this level, is 100,000 views. And anything under 5,000 now I would consider is a bad post. Average I do is
for views.
Yeah, for views. I do about probably 25,000 views on an average post and about a 1% engagement rate. Just under 1%, about 0.8, somewhere in that range. So
that's interesting.
I think over the last 90 days, I've done about 2.3 million views, if I remember right. In fact, I'm going to look because I'm curious. I'll tell you.
Because you're a numbers guy. I like this.
I am a numbers guy. I'm totally. So, if I go to the profile, it'll show you the last 7 days. So just to kind of give some statistics here, I've had 213,000 impressions in the last 7 days. So about 30,000 a day. I've had, almost 1,700 searches, 8,000 profile views. If I look at the last 90 days, what I've done, so past 90 days, I've had 2.3 million impressions. That's up 16% compared to the prior 90 days. And my engagement.
And is that so?
Go.
Keep going.
Yeah. And I was going to say the engagement is 18,000 engagements between shares, views, likes, which is up 3% compared to the prior 90 days. So my views are up, but my engagement as a percentage is slightly down in the last 90 days.
As a percentage, but it's still up.
It's still up. Yeah. Overall. The overall number of engagements is up.
So what are you paying attention to then? Like you've got all this stuff going on. You've got meetings and things. You got to do your posts. What's the most important thing?
So for me, I mean, it all kind of feeds together. As far as on LinkedIn, the most important thing, there isn't one. I look at it as a combination strategy. There are days when it's really trying to add people, add followers, because 30% of the number of views you're getting on LinkedIn is related to your followers. It's the number one correlation they can find. And not coincidence, right? The more followers have, the more views. So there are times when you're trying to do content that's really around just getting people to follow you, providing free information that people like. And then there's other times where very much the content is trying to brand yourself as an expert around tools. Very much speaking about that. When I niche down and speak in detail about tools, I might only get 10,000 views. But I may get 2 people who reach out to me that want to meet with me about a CEO, and one of them might be a client or there might be a business opportunity. So it's finding the right mix to, drive the engine, the funnel, so to speak. Because I don't do any paid advertising. I've done 0 paid advertising. Everything's come through, LinkedIn. I do have a very small Instagram and Twitter.
But that is,
and then I have the podcast, which helps as well.
Yeah. And I have found too, the people who focus on one platform tend to do a lot better overall than the ones that are shallow, like across all and trying to grow all.
Yeah.
And just me personally, like I can only focus on LinkedIn or Twitter. And if I go too hard on one, then the other one just falls off.
Yeah.
And I'm sitting here like trying to grow them both, and I don't even know what the hell I'm doing. So this is great advice.
I didn't know what I was doing it either. I've been figuring it out as I go. So
yeah. But the low views sometimes, how when you do something that's real has at least a lot of value to the people that it does, maybe it is lower engagement, but it's going to create more opportunities for you. So that's why you're mixing it up.
Yeah, exactly. That's why the tools area. If I was strictly just wanting to get followers, I'd probably talk a lot more about Excel and financial modeling. But I enjoy demoing tools. I enjoy working with the vendors. I feel like I've become an expert in that space. And so I write about it. And I can get some really good, views on that, but it's never going to be top content because it's more niche, right? There's more of a focus. It's not as much
for sure
people are thinking about. But I definitely write about it, one, because I enjoy it, and two, that's what people know me for. They kind of know me as the tools guy now in the FP&A space, and so people expect me to speak about it, and I like.
They know you as the FP&A guy.
They do, but a lot of people also know me.
You're
as
not the tool guy. You're the FP&A guy.
Yes, that is what I'm first known as. But I mean, these different vendors, they know me as someone like I've talked to all of them, and this guide we came out with has made a huge difference for them in the marketplace, right? So they know me as the guy that knows the software tools. Like people will be like, oh yeah, you have a new tool? Go talk to Paul. Like I get people that refer them when they come to talk to them, they refer them to me. Like, hey, I was referred to you by so-and-so. Can you demo my product?
Mm-hmm.
So
the branding too, FP&A guy. I think on our previous call, you kind of gave me the story behind that. How did you throw that together?
So I don't remember when it happened, but it was well over a year, 2 years ago. Just one day I was trying, when they came out with hashtags on LinkedIn, I was like, I got to throw a hashtag on here. And I'm like, I'm just going to throw the FP&A guy. And I still remember I almost stopped doing it. Someone complained to me that they're like, well, women can work in FP&A too. I'm like, well, yes, but I'm a man. I'm like, well, you shouldn't be using that hashtag. And I was almost like, okay, are people offended? Like maybe I won't use it. I decided I was going to stop, and then somebody used it in a post. They're like, hey, you need to follow the FP&A guy. And I got like 50 followers that day. And I'm like, I'm not giving this up. I'd already decided I'd picked another one, something like, I think it was FP&A hot takes or something. I don't remember. But one of the best decisions I made was sticking with that because, if you type the FP&A guy into Google, the entire first page is stuff by me. Either articles I've written, my website, my LinkedIn profile, outside of ads, nothing else comes up. And, people remember the names like, oh, hey, I want to go see what he's done. They'll type that into Google and I own it.
Yeah. Well, I'm going through something very similar. Every episode we're recording is Accounting High because I wanted to get it a little bit more neutral. But that was because the first co-host I had, we were sons of CPAs.
Yep.
Both male. And then now I have other co-hosts too, technically not even son or daughter of CPA. So we're going with this whole Accounting High theme, and the branding is going to be high school, and it's just going hard on that. But I also don't want it associated with me. And that's also why I want to separate from the sons and daughters and all that and just go straight up accounting.
Yep, makes sense.
And it's very niche though. At least our audience, I can't see it growing too big like that because we're not going toward general business owners, it's accounting firm owners.
Yeah, no, I totally get it. There's a
fair, not a lot of
limit,
accounting,
right?
Yeah.
To the audience size. I recognize that in FP&A as well. I mean, it's not like I'm ever going to have 1 million followers on LinkedIn, and I don't need that. So.
Yeah. But, it's, you look at you. So who do you look to as like competition in this market? Or worthy rivals?
I don't really think of them as rivals or competition. What's nice is almost all the content creators, we work together on things. We talk all the time. A lot of the most popular ones on LinkedIn. And I've partnered with them on different things. We're all different enough that we really try to help build each other and grow together. Like a guy by the name of Christian Wittig, him and I are speaking at the Association of Finance Professionals. He has his own course in FP&A. Nicholas Boucher and I have talked multiple times. Anders, which has one of the biggest profiles, he focuses on business partnering. We partnered on this 3rd generation market guide. Asa focuses on the India market and helping people new in their field. And we've partnered on things. And so really, I really look at it as we each kind of have our own unique niche, and we should find ways to help and build each other, because there's more than enough room for the people that are in the marketplace, which is great, which is what you want, where you're not stepping on each other's toes and it's, hey, I'll undercut your price, right? It's not a market I want to be in.
I love that too. I always answer this question the same way. People ask me, I'm doing my raps now, and they're like, well, what about this guy? He's a rapper. Like, don't you have competition now? And I was like, I don't see that. I would love to work with anybody else that's trying to rap for accountants or business owners. Like, that's not really happening that much. That's blue ocean right there. So yeah, I mean, nobody's really competition when you see everybody as a friend, and you see everybody as, potentially could work together too, because everybody's, kind of in this together. But your market has got to be pretty small. Like, you can probably only count that on your hands how many people are doing this daily.
Yeah, I mean,
maybe not on your, like, in this space.
Yeah, the daily creators on LinkedIn that are really FP&A, you get a few more if you get into the fractional CFO services, but FP&A, 8-10 of us probably. I mean, then there's a handful of maybe 15 others that are fairly regular. Like DataRels did a article where they listed the top 20 people on LinkedIn to follow in FP&A. Right, the list was 20 long. And not all of those post every day. Some might post a couple times a week.
Yeah.
So yeah, it's definitely small. It's not like the data science or data space where you got, a couple hundred people.
So my goal in 2 years is to do a rap a day.
This I want to see.
2 years. Yeah. And I might put them on TikTok, LinkedIn, wherever.
Can I have an FP&A guy?
I'm not ready
rap?
for that yet. I can't. Oh, I'm not like quite you can for sure.
All right,
I
when you're
could
ready,
write you a rap.
I want a rap. I'll put it on my website.
I'd love to do that actually. Like that would be dope. I'm open market here. I got a lot of ideas, a lot of raps I'm working on, but they take me a while. Like
well, let me know when you have
for
time and what
recently.
something like that would run. It'd be fun. I'd be open to discussing it. So
yeah. Oh hell yeah, that'll be dope. So you got daily creators, but a ton more of daily consumers.
Yes, less than 1% of people post at least once a week on LinkedIn. 1%.
But how many people are going on LinkedIn daily?
So the average times, there's 800 million people on LinkedIn altogether. I think it's about 40%. I just saw the statistic the other day on an article. I know the average amount of time someone spends on LinkedIn is 17 minutes a week. So you don't have a lot of time to catch their interest. But let me see. LinkedIn statistics that will blow your mind. That was the article that I just read the other day. And let me see if I can find it because it was really interesting. So
those are good numbers,
830 million members, 58 million registered companies. Of those, LinkedIn users are frequently engaging with the platform. 40% access it on a daily basis. So about 320 million are on there every day. Users only spend about 17 minutes on LinkedIn per month, though. That's across everything.
Oh.
So,
and across all users.
50% of adults who have a bachelor's or advanced degree in the US are LinkedIn users, while the site engages with only 10% of people whose education doesn't surpass high school. So it's a professional networking site.
And Microsoft owns LinkedIn.
Yes, they own all that information.
Yeah. And that was me just getting full circle back to the beginning here.
Yep.
Right? Microsoft will eventually have an FP&A tool. Mark my words. Eventually they will. Maybe it makes sense for them not to now, but you would think that this is part of their market.
Yeah, it's going to be really interesting to watch Microsoft grow. I mean, the big focus right now has been owning the BI space and integrating it better with Excel. And it'll be interesting to see what they do from there. But yeah, I mean, would it surprise me? No.
Maybe they won't need an FP&A tool because the BI will just AI will just tell you what you need to do, right? You don't need a person. You don't need a tool to do it. They'll just take everything in and give you the
and
answers.
also maybe you'll continue
Ask
to see more
Jeeves.
on the spreadsheet side of trying to meet that need, because it's what a lot of businesses use nowadays.
Yeah. Maybe there'll be an Excel add-on. Who knows? So, Paul, appreciate you coming on. Thank you for your time. I know you're a busy person. I know that our audience should know where to find you because you're the FP&A guy. They can just Google it. That's going to be easy. Any parting words of wisdom for us?
No, Scott, just enjoyed being on the show and talking with you. And I guess, as one parting wisdom, a lot of people ask me about starting a business, starting a solopreneurship. If content creation is what you want to do, find your niche, find your market, be consistent and add value, and it will happen over time if that's really what you want. I mean, I didn't set out to do this. It just kind of happened. Just started doing it, liked it. And before I know it, I got some job offers. I'm like, hey, maybe I can turn this into a business. So this wasn't intentional at all. But the advice is so often people get asked, well, how did you do what you do? And it's like, just start doing it. Like, it's like anything in life. You got to start somewhere.
And nobody's good at it in the beginning anyway.
No.
Nobody is that good at this stuff. And, like I always use that as an excuse. Oh, my posts are terrible or I'm not that good. And it's, I get no engagement because I'm not doing this daily. I maybe do it once a week. If not, I do it every other week or every once a month sometimes.
No, I've written plenty of crappy posts.
Consistency and value.
Mm-hmm.
I like the consistency and value. That might be the title of this episode. So, Paul, appreciate it. The FP&A guy. Check him out. He's dope. Thanks for coming on,
Yep,
Paul.
thanks for having me, Scott. Appreciate it.